Hi, I'm Karan Thapar. Over the last few years, I hope you've been watching my program, The Interview on the Wire. During that period, I've interviewed doctors, politicians, businessmen, scientists, authors, and even the occasional Nobel laureate. For me, it's been exciting. I hope it's been enjoyable for you. But these, as you know, are tough times, and if this program is going to remain bold, independent, and sometimes even defiant, then I think we need your support. At the end of the day, it's a truism, but editorial independence is best defended by the viewers. So if you would like this program to remain the way it is, forthright, outspoken, and interesting, then would you consider supporting us? All you have to do is to click on the description at the bottom. But more than anything else, I hope you will continue to watch the interview. Your viewership means an awful lot to me.
Hello and welcome to a special interview for The Wire. This is what the well-known and highly regarded financial journalist John Hyatt has written in the recent issue of Forbes magazine. Forbes has identified previously unreported transactions involving offshore funds with ties to Vinod Adani that appear designed to benefit the Adani Group as a whole. The deals also lend further credence to Hindenburg's allegations of hidden leverage and accounting irregularities within the Adani Group. Joining me this evening, live from New York, is John Hyatt to talk about those unreported transactions, what they amount to, their implications for the Adani Group, how India's regulators, both SEBI and the government, should respond, and what impact this could have on India's image as an investment destination, particularly for foreign investors. Mr. Hyatt, let me once again, for the sake of the audience, repeat that critical quotation from the very start of your Forbes article. You write, Forbes has identified previously unreported transactions involving offshore funds with ties to Vinod Adani that appear designed to benefit the Adani Group as a whole. The deals also lend further credence to Hindenburg's allegations of hidden leverage and accounting irregularities within the Adani Group. Now, before I come to details of these transactions, let me ask you to set the scene for the audience by telling them how damaging are the questions these transactions raise about the Adani Group.
Thanks for having me, Karen. I think, if left unanswered, the questions raised by these transactions could be quite damaging. Of course, these are complex deals, which, we'll get into, and they involve various Adani subsidiaries and offshore funds and complex lending instruments. But I think essentially what we're looking at is two things that are interrelated. One is this issue of hidden debt. In both of the transactions that Forbes reported on this week, there were Adani affiliated parties lending money to Adani subsidiaries. So in one instance, that debt is secured against Adani stock that has not been disclosed. So there's a question of disclosure of leverage as well as, potentially hidden debt. And second, there's these issues of possible accounting irregularities. When we're looking at loans between Adani Group subsidiaries and related parties, we have to ask ourselves, what is the legitimate business reason for these loans? And at least on the surface level, there don't appear to be business reasons. So, the question with some of these loans is money being moved around between subsidiaries to make them appear more creditworthy, to attract investment, to reduce tax liabilities? And, before we get into it, I do want to note that, Forbes reached out to the Adani Group days before publishing our article and, asked for comment, and we did not hear back. And of course, the Adani Group has denied all wrongdoing.
I'll come to the details of the true transactions that you've discovered and identified in a moment's time. But am I right in saying that these transactions raised serious questions, not just technical issues, but serious questions to do with legality and perhaps even to do with the moral functioning and governance of the Adani Group. Would that be correct?
I think that's fair to say, yes. And I think that, Hindenburg Research's allegations also raised those questions. So I think, when we think about this reporting, we're thinking about, new transactions that have come to light in wake of sort of the bombshell that was the Hindenburg Research report. And obviously, I'm not an Indian securities lawyer, but I think there are likely, legal issues that bear looking into.
Absolutely. As you say in that quotation that I read, your transactions lend credence to the Hindenburg allegations and therefore, in a sense, appear to corroborate them. Let's then, with that background, come to the transactions themselves. There are two, and let's take them up one by one. First, you found that a Singapore company called Pinnacle Trade and Investments, which is controlled by Vinod Adani, in 2021 took a loan of $240 million from the Russian bank VTB, offering as collateral two investment funds which only hold Adani shares. And in turn, Pinnacle lent $235 million to an unnamed related party. Do you have any idea who this unnamed related party could be? And is it likely to be an Adani Group company?
I don't know who it is. And all we know from the filing, and this is Pinnacle's annual filing with Singapore Financial Registry, is that the borrower of this loan is, quote, an entity within the holding company's group of companies. Okay, what does that mean? Well, if you look at Pinnacle's annual filings, it's actually held by three different holding companies that are registered, two of which are registered in the British Virgin Islands, the other in the Cayman Islands. And they're similarly named entities: Atulia Resources Limited, ARFT Holding Limited, and Atulia Resources Family Trust. We know that Vinod Adani controls the junior two of those companies, and the parent company, Atulia Resources Family Trust, has been linked to the Adani Group's assets in Australia. There was a big flurry of articles in 2017, 2018 about how many of the Adani Group's assets in Australia are owned by these offshore entities. So yes, it's all but certain that Pinnacle did lend this money to some Adani Group company or subsidiary or related party. The key questions are to whom and for what purpose? What was the legitimate business reason of this loan? We don't have answers to those questions yet.
Let's explore the second of those questions. For what purpose was the money loaned? What we're fairly sure of is Pinnacle lent the money to one or other of the Adani Group companies. Now, do you believe, or maybe I should say, do you suspect that this is a case of round tripping or a case of share price manipulation, or maybe both?
So I don't want to speculate too much on what the purpose is, because in order to determine that, we really need to know what company received this money from Pinnacle and whether there was any sort of legitimate business reason for that company to receive the loan, particularly for round tripping. But if we think about share price manipulation, I think we should take a step back a little bit and consider this loan within the broader context of how the Adani Group runs its businesses. So in its initial, in its report, Hindenburg Research did sound this warning about additional hidden leverage within the Adani empire. I mean, that's pretty much what we're seeing here. We have Vinod, a member of the Adani family, borrowing money against Adani Group shares and then lending that money out to a related party without appearing to disclose that these shares are being offered as collateral. Now, when you're an investor or a lender to Adani companies, you're aware of the fact that, this is a highly leveraged business. That's part of their model. They fund acquisitions and they fund their growth through offering debt. And, that's well known. But, share price of Adani companies is based on what's publicly reported about their financials. So, if these loans are obscuring the financial health of Adani Group companies, then investors and lenders are giving money to Adani Group companies on terms that they didn't agree to. And so, I think direct share price manipulation that would only be the case if the proceeds of the loan were being used to fund, purchase of Adani Group shares. But I think in the broader context of, how Adani Group companies are valued and, the financial health of these companies and, whether their financial income statements and balance sheets are accurate, that's kind of comes to the heart of the questions.
Let's leave share price manipulation aside. To be able to even suspect that, leave aside, prove it, you need a lot more evidence about, in fact, market changing of shares. But let's stick to the first thing that you said. Vinod Adani has borrowed money where Adani Group company shares have been put up as a collateral, and that money in turn has been given to another Adani Group company. That does prima facie, and I'll use the language carefully, suggest round tripping, doesn't it? Prima facie, that's the suggestion or suspicion.
Right. And, it all comes back to what is the legitimate business reason for this sort of transaction, right? When a company needs money, a company can go to a bank and take out a loan, or a company can, sell bonds as Adani Group companies do. The question is, why do it through this Byzantine maze of offshore entities? And so, it raises legitimate questions.
Now, you make one further point about Pinnacle Trade Investments and that loan that they gave. You write, by pledging the investment funds as collateral, rather than the Adani Group shares those investment funds own, Pinnacle has perhaps avoided the obligation to disclose pledged shares to India's financial regulators. What would be the implications of regulators finding out about this, and how damaging would that be for the Adani Group if the regulators did find out?
Right. And so if you don't mind, I'll just kind of clarify this a little bit, because it gets a little technical, and I think it's important to explain before answering your question. So in its annual filing, Pinnacle discloses that it's pledged these two investment funds, Afro-Asia and Worldwide, which are owned by Vinod Adani, by the way, as collateral for its loan. Now, the only assets these investment funds appear to own are shares in Adani Group companies. And so Pinnacle's loan is effectively backed by those Adani company shares. But as a technical matter, the loan is backed by the investment funds themselves, the legally incorporated funds, rather than the shares. So this is really a legal distinction more than it is a practical distinction, right? If Pinnacle were to face a margin call on its loan, those funds, they would have to sell their Adani shares or post more Adani shares as collateral, because they don't have any other assets backing up the loan, as far as we can tell. Now, the reason this legal distinction matters is because it becomes a question of whether Indian financial law allows for such an arrangement. And perhaps it does, in which case, it's something of a loophole, which is not, uncommon across different, jurisdictions in the world. But, one can imagine a situation in which India's financial regulators say, look, in theory, of course, we think that investment funds should be disclosing that they're pledged as collateral, but the law as written doesn't require them to do that. So I think it's a question that, lawyers who are far more versed in this than I will be looking into, as well as SEBI, one would imagine. I think from a corporate governance perspective, though, the ideal outcome here is that, a law requiring funds to disclose any form of pledging, whether it's the funds themselves or the shares that those funds hold.
So what you're saying, if I've understood correctly, is just how embarrassing this could end up being for the Adani Group if it were to be disclosed to the regulators that behind the funds is nothing but Adani Group shares, depends upon the precise nature of the regulatory law in India. If there's a loophole that permits you to hide it, then it's not a problem, except perhaps in the moral dimension. But if that loophole doesn't exist, then it would be a serious problem of governance and a question that regulators would need to inquire into.
That's exactly right. Yeah.
Now, the second transaction that your article in Forbes magazine refers to dates back to 2012 and concerns a Cyprus company called Vakada Investments. And once again, this company, Vakada Investments, is owned by Vinod Adani. Vakada, it seems, received $232 million in loans from Vinod Adani himself, as well as from an offshore firm in Dubai, and spent $220 million to purchase compulsorily convertible debentures in two Adani companies, which ultimately end up being subsidiaries of Adani Enterprises. Once again, what do you believe was happening in this case? Or maybe I should put that question differently. Do you suspect that this is a more clear-cut case of round-tripping?
Right. So this is a really interesting example here because we know more about the various parties involved in this deal. In the case of Pinnacle, we know that the money was being lent out to a related party, but we don't know what related party. In this case, what we have are these subsidiaries of Adani Enterprises, which received this injection of capital. And then in that year, these subsidiaries, along with a host of other subsidiaries, which were housed within one big subsidiary called Adani Infrastructure, it was sold off, seemingly to another group of Adani-affiliated shareholders. So, it raises legitimate questions about, why was this loan made and structured in the way it was? Why were these entities sold off to another group of Adani affiliates that year? And, again, was there a legitimate business reason for this series of transactions to happen? Or, was this used for, misconstruing finances? That's the key question. And we haven't received a direct answer, of course, from the Adani Group on that point.
But in your article, you should reveal that you did consult two separate professors. The first was a gentleman called Dan Taylor, who's a professor of accounting at the Wharton School, and he told you this could be an attempt to benefit the company or benefit someone else by potentially pushing up earnings and getting debt off the books. But the second professor you consulted, Vikramaditya Khanna, a professor of law at the University of Michigan, gave you a very different answer. He said this could be family politics, and as he explained, complex arrangements between different family members are typical of Indian family businesses. Now, as someone who actually first discovered and revealed these complex Vakada investment transactions, which of the two explanations do you personally incline towards?
Well, it's a great question. I think, it's important to consider both of those possibilities on their merits. So let's start with this idea that this transaction was concocted to push up earnings. If we look at Adani Enterprises' 2013 annual report, the year in which these subsidiaries were sold off to another group of Adani entities, Adani Enterprises recorded a net profit of around $60 million. Okay. Within its business operations, $81 million of profit was from the sale of Adani Infrastructure. That is the parent company of the subsidiaries which received that injection of capital from Vakudare. So, what we see is that, this disposal of assets helped the company record a profit in 2013. There are questions about whether, this specific set of transactions involving the, loan to equity deal that we've been discussing contributed to that profit, or, whether there were other, assets and liabilities involved that, we can't see. So, but again, that's, a serious question because, they recorded a profit that year. And now on the family side of this, is this some sort of family deal? Well, look, you have Vinod on the one hand, kind of arranging the loan. And of course you have Gautam at the, head of the whole enterprise. What's interesting here though, is you also have Vinod's son, Pranav Adani. And Pranav is actually listed as a director of Adani Infrastructure, the subsidiary in question. So one does see how there could be an element of family politics involved here. But I should add, this isn't necessarily an either or situation. As is the case with any sort of large business with complex finances and a multitude of stakeholders, smart people like Gautam Adani and Vinod Adani, they know how to strike deals that advance multiple aims at once. So I don't think we should, rule out that it could be both.
Okay, let me put it like this and correct me if I'm wrong. If it is simply family politics, then it's located within the Byzantine structures that Indian family businesses tend to construct. It's complicated, but not necessarily illegal or immoral. But if it is designed to actually push up earnings or get debt off the book, or in some other way round trip finances, then clearly it raises serious governance and moral issues. We don't know which it is, and it's possible, as you say, it might be both. Things could be intermingled and interlinked in a way that we don't fully understand. But once again, it raises questions. Have I summed that up correctly for you?
Yeah, that's correct.
Now, at this point, I should inform the audience of something that the Congress Party made available in India on Sunday night, that is roughly 48 hours ago. They made public a memo that the Adani Group had submitted to the Bombay Stock Exchange in 2020, which is roughly 2-3 years ago. And that memo says, and I'm quoting, the Adani Group means, amongst other entities, Vinod Adani and all companies and entities controlled directly or indirectly by Vinod Adani, whether separately or collectively. And I should point out to the audience that this suggests, I underline the word suggests, that both Pinnacle and Vakada are Adani Group companies. And the fact that they are controlled by Vinod doesn't make a difference because all Vinod companies are said to be Adani Group companies. And secondly, this memo suggests that what you've revealed in the case of Pinnacle and Vakada clearly looks like round tripping. Money being borrowed against the backing of Adani shares to be given to another Adani company by an Adani company to begin with. That's classic round tripping. So this memo from Congress, which I know you haven't seen, Mr. Hyatt, does clearly corroborate the fears and suspicions that lie in your mind as well. I'll leave it there because I know this is not something you can comment on because you haven't seen that memo. Let me now at this point come to what you reveal and say about Vinod Adani in your Forbes article, because you have some very interesting details about him as an individual. You say, and I'm quoting, he holds a Cypriot passport and is a permanent resident of Singapore. His birth date is a mystery, and he even goes by several names, including Vinod Shantilal Shah. Would I be right in saying that all of this makes him sound a bit like a phantom character?
Yeah, you're right. There is an air of mystery about Vinod that I think we've discovered. And, perhaps the most striking part of him, in my opinion, from our reporting is he's sort of this ultimate global financial elite in some ways, right? He's been doing business in Dubai and the Middle East. He's active in Singapore and in Indonesia. He's been living abroad for years. And, that's helped him, we should say. When India's Directorate of Revenue Intelligence was investigating the Adani Group over allegations of it inflating the value of its coal imports, Vinod was a suspect in that case, but of course he was abroad, and so he wasn't available for questioning. As interesting as Vinod is personally as a character in this drama, he's also an embodiment of the sort of global financial architecture in which we live in. And which Hindenburg, portrays. He's the ultimate offshore operator. This is somebody who's capable of either executing or masterminding, a very complex business strategy in which various assets are obscured through different domains in the Caribbean, in Mauritius, in Singapore. So, he's a fascinating character.
Now, you write, and again, I'm quoting you, Forbes's findings and the Hindenburg report show that Vinod owns or has been associated with more than 60 entities in offshore tax havens, including the Bahamas, the British Virgin Islands, the Cayman Islands, Cyprus, Mauritius, Singapore, and the United Arab Emirates. Does this suggest that he has a critical role to play in the Adani Group, as well as in its dramatic rise in the last few years?
It's a great question. I think on an operational level, he plays very little role, as far as I can tell. The businesses themselves, like the actual infrastructure assets and the running of those assets, it doesn't seem like he plays any real role. I think when it comes to the financial operations of the Adani Group, and how the shareholders are structured, obviously, these transactions that we've highlighted in our reporting, it's clear that he's playing a role in the company's financial arrangements, and some of this is kind of hiding in plain sight, right? When the Adani Group purchased Ambuja and ACC Cements last summer, the entity listed as the Adani Group owned buyer was an entity called Endeavor, which identified its owner as Vinod Adani. So there is a sort of doublespeak dynamic at play here, in which the Adani Group denies Vinod's involvement, but at the same time he's showing up in corporate filings as a major shareholder. He's showing up as the owner of Adani Group entities, and he's also apparently playing a role in lending to various Adani Group subsidiaries.
Now, you're right. And again, I'm quoting you. Forbes' estimate is that he, meaning Vinod Adani, owns roughly 2 billion in shares of 4 publicly traded Adani companies, plus Ambuja and ACC. And then you add, it's difficult to untangle Vinod's personal fortune from Gautam's, and he could be worth a lot more than those 2 billion shares. Does this mean that Vinod and Gautam's wealth is so closely intertwined that we can't be sure of the exact wealth of either man?
Yes, that's absolutely correct. And, it's always difficult to estimate the wealth of any billionaire. They make private investments that go undisclosed. So, for example, we at Forbes value the wealth of, America's richest. So take, say Jeff Bezos, right? We see that he owns a certain amount of stock in Amazon through public filings. But, there are investments that people like him make that, we never learn about, and, which can contribute to, his net worth to the tune of billions of dollars. So, estimating wealth is always an imperfect science. But in the case of, Vinod and Gautam, it really is difficult to delineate between one person's assets and the others. And that's by design. You don't set up funds in Mauritius and the Caribbean because you want to support the local island economy. You do it to remain anonymous. You do it to obscure information about who is the ultimate beneficial owner, I should say, of the shares in question. And, during the course of this reporting, Forbes actually lowered its net worth estimate of Gautam slightly because assets we previously identified as his, we found actually belonged to his brother. And, by the way, it's not just, these two, Gautam and Vinod. There are multiple Adanis who are directors of Adani Group companies. So this is very much a big family affair.
Now, before we end, let's come back to your revelations one more time. As a leading financial journalist, do you believe that what you've exposed is a matter for SEBI to inquire into? And if the answer is yes, do you have any sense of what SEBI should be doing?
Well, it does appear that SEBI is already investigating, or at least beginning a probe of the Adani Group over its botched share sale at the end of last month. And that's according to Reuters, which reported that about a week ago. So I think it stands to reason that any ongoing probe from SEBI would include information made public that it suspects is pertinent or material to their investigation. So that includes the work of Hindenburg, that includes the work of Forbes, that includes also the great reporting done by many Indian journalists that's been being done for years, frankly. I mean, as you discussed with the previous guests, much about the Adani Group, in its broad outlines at least, has been known for years, among Indian journalists. So I think, it's less a matter of whether there's, new grounds for SEBI to look into specific things. And actually, it's a question of whether is there the political will within SEBI and at the highest levels of Indian government to carry out an investigation of the Adani Group in an impartial way and, let the facts lead where they may.
That doubt that you raised when you asked the question, is there the political will, leads directly to my next question. The Adani saga hit the headlines with the Hindenburg report on the 24th of January. That's almost a full month ago. How would you, as a financial journalist, evaluate and judge the response, both from SEBI as well as the response so far from the Indian government?
Well, on behalf As for SEBI, okay, if they've begun an investigation, that's kind of what you would expect at this stage. You wouldn't expect SEBI or any securities regulator to announce or talk publicly about an investigation. So, by all appearances, some sort of probe has begun, which is, what you would expect. As for the Indian government, I think their silence has been telling. Of course, you wouldn't expect, Prime Minister Modi to condemn a company with which he's been closely tied for so long, but perhaps you'd hope that he would express concern about the allegations, or even voice his support for an impartial investigation. I also don't think silence is necessarily a bad thing, though. If Prime Minister Modi were defending the Adani Group and blasting Hindenburg every other day, then you'd have a very transparent effort to corrupt any sort of investigation. I mean, look at the US under Donald Trump, right? When the former president was decrying probes by the FBI, calling them a witch hunt, he was undermining investigations, and he was corroding American democratic institutions. And the fact that Modi is not doing such a thing, I think if anything, that's a good sign.
Now, on Thursday, George Soros said that the turmoil in the Adani Group has shaken faith in India and it threatens investor confidence. Is that your belief as well? Or is Mr. Soros scaremongering, as the Indian foreign minister has said?
I don't think that most foreign investors are going to be lumping all Indian companies into one basket. I mean, the Adani Group is its own entity, and I don't think it's in general healthy to group firms together in that sort of way. At the same time, I think there is something to be said about, confidence in, countries and, how cross-border capital flows move and how they might be influenced by this sort of prominent scandal. Whether or not that's fair for Indian capital markets and, for other publicly listed Indian companies, I don't think it would be fair, but, there is something to be said about, sentiment and how that drives, movement of capital across borders.
On that question of sentiment, and I presume what's at the back of your mind, the sentiment has been adversely affected by the entire Adani saga. Given that 70 or 75% of Adani Group debt is sourced from Western financial institutions, or maybe I should ask, should regulators in the West seek details from the Adani Group about the two specific transactions that you revealed in your article?
Well, it's a great question. I'm not sure they would, because, they don't have jurisdiction over the Adani Group and its financial dealings. So, it's probably not their place, and they have, their own things that they're looking into in the US and in Europe. But I think, what we'll have here is financial institutions rethinking their relationship to the Adani Group. So, after Hindenburg's report was released, Forbes ran a story about the various Western investment banks that have been making millions of dollars in underwriting Adani Group bond offerings. According to financial data provider Refinitiv, between 2015 and 2021, 6 different Adani Group companies have raised about $10 billion in US dollar-denominated debt. So, Wall Street banks have been making a killing through the Adani Group's rise. And so I think a big question moving forward is, will foreign investors and banks want to be dealing in Adani Group bonds and Adani Group equity? I think that's still to be determined.
So if I've heard you correctly, what you're saying is that the Adani saga will raise serious question marks about Western financial institutions wanting to continue to be related to the Adani Group, but you don't believe there will be adverse impacts on the rest of the Indian corporate structure or financial institutions in the West wanting to help out Indian corporate industry. That wider damage won't happen, but the Adani Group has certainly suffered adverse damage.
That's currently what I anticipate, but I think it's contingent on, how the next couple of months go. Where does this investigation of SEBI net out? Where does the Adani Group end up? I think there's a lot still to be determined, and we're going to have to see how the next couple of months go.
So the next couple of months could be critical for the wider picture and image of India as an investment destination?
I think so, but I think, long term, India is still a growth economy and a growth story. So, I think, this is going to create kind of a roller coaster experience, I think, for, until the situation is resolved. But I think, fundamentally the demographics and, the sort of macro picture of India is still in place. So, long term, I don't think it's going to be an issue.
John Hyatt, thank you very much for your time, and thank you very much for explaining in detail the transactions that you've discovered, their implications, and how you believe both the government and SEBI should respond, as well as what the impact will be on the Adani Group and on India as a whole as an investment destination. I'm very grateful.
Thanks for having me.
Hi, I'm Karan Thapar. Over the last few years, I hope you've been watching my program, The Interview on the Wire. During that period, I've interviewed doctors, politicians, businessmen, scientists, authors, and even the occasional Nobel laureate. For me, it's been exciting. I hope it's been enjoyable for you. But these, as you know, are tough times, and if this program is going to remain bold, independent, and sometimes even defiant, then I think we need your support. At the end of the day, it's a truism, but editorial independence is best defended by the viewers. So if you would like this program to remain the way it is, forthright, outspoken, and interesting, then would you consider supporting us? All you have to do is to click on the description at the bottom. But more than anything else, I hope you will continue to watch The Interview. Your viewership means an awful lot to me.